Hi everybody, it's Chris Baynes at Coldwell Banker Seacoast Advantage in Wilmington, North Carolina. I want to talk with you today about something near and dear to all of us, and that is about home affordability or housing affordability. And you may have heard this in the news. You should have if you're paying attention. Basically what that means, right now homes are more affordable to us than they ever have been in the past, and that's because of low interest rates. Now if we think about it, we're looking at around 3.75%, a little bit more, a little bit less in some cases, depending on your ability and your financial situation, but that is phenomenal. But what does that really mean to us, and what kind of effect is that going to have on our ability to purchase a house? Well, let's consider a couple of things, and you can look at the charts down here below in my blog post. Or if you're not on my blog post and you're just on YouTube, go to our website and check out this blog post. But one of the things that I did here is I compared interest rates at 3.75%. What can I afford given a particular scenario? I just used one individual. At 3.75%, this particular individual can afford to buy a house that's $199,475, so $200,000. Okay, based on a random income amount, I can afford $200,000. What if the interest rates slip up 1% to 4.75%? That's going to take my housing affordability way down from $200,000 to $177,000. That is huge. That's an 11% reduction in affordability, 1% interest rate increase. Wow. Now let's take a look back, consider back in 2006 and 7 when people were getting 6.25% or so interest rates. Not bad interest rates. Same scenario, $150,000, all I can afford. If that was the case. So keep that in mind. That is huge. 1% increase in a mortgage interest rate increases or decreases your ability to purchase a house by almost 11%. One more way to look at this, let's just look at the consideration of what is the difference in our mortgage payment. If we're just buying a $150,000 house at 3.75%, your payment is going to be around $700. If your interest rate's around 6.25%, it's going to be $923. $230 more per month. Holy cow, that's huge. I mean, in a year's time, you're talking thousands of dollars. So why am I saying this? Because some people are still on the fence. A lot of people are off the fence. A lot of people are moving forward in this market. But if you're sitting there waiting for prices to bottom out, guess what they have? Bloomberg just reported the first time since 2007, year over year, slight price increases across the country. Every market's different. The market here is going to be a little different than Southern Florida and California and the Midwest. So you'll want to just talk with your real estate professional in those areas. However, across the board, we're seeing the mid-range, the $500,000, $600,000, $700,000 houses and lower. Those prices are good. They're basically where they're going to be and pretty much turning around for the most part. So that 10 or 11% that you're going to save is going to more than protect you if you have another 1, 2, 3% adjustment in values in your particular market. So yes, it is an absolute wonderful time to get out there and start looking. Obviously, pay attention to your particular market, but this, in general terms, this is a great time to be out there buying. We're seeing our prices have stabilized here. We're in good shape. If you're thinking about moving to Wilmington, give us a call. We'll be glad to work with you on it. But we don't want to see you guys lose the opportunity to get sub 4% interest rates on a property, sit around wait and kind of miss the bus a little bit and then be stuck into 4 plus. 4 is not bad, but we'd like to see you be able to move on that sooner than later. If you have any questions, give us a call. Look forward to hearing from you. And again, thanks for watching.